This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Turbulent quarter, an ugly start, a calm finish. But there was one sector that stood out during the past 3 months for all the wrong reasons. Labor shift. Net job growth in the past decade has come from contracting gigs. And that's changing a lot more than just how we work. Coming soon, what one movie theater is doing to win you back. All that and more tonight on Nightly Business Report for Thursday, March 31st. Good evening, everyone, and welcome. Sue Herrera is off tonight. Well, ball games are never won in the first quarter, but they can often be lost there. And for the first half of this year's first quarter, it sure looked like the investing game for 2016 was over. Tipped off, stocks did, with their worst start to a year ever. Correction territory for the Dow and the S&P 500, almost a bear market for NASDAQ. But then, like that Texas A&M basketball team last week, a furious, miraculous comeback. Oil prices rose, recession fears receded, China settled down, and stock investors started hitting three-pointers. Well, today the first quarter ended, and you, as the coach of your portfolio, should feel relieved that the game didn't get away from you. Those big early declines for the S&P and Dow, they're gone. Those indexes are now both near their highs of the year, back in positive territory after posting their second straight quarterly win. The final day of Q1, ended quietly. The Dow Jones Industrials lost 31 points to 17,685. NASDAQ rose fractionally. The S&P 500 was off 4. As for the NASDAQ, well, it remains negative for the year, but by less than 3%. A three-pointer in the second quarter, and the NASDAQ games all even for the year. The quarter's most glittering performance, gold, best there in 30 years. Bob Pisani at the New York Stock Exchange had a front row seat to all the action this quarter.
The quarter ended on a quiet note, but there were plenty of fireworks along the way. The S&P ended essentially flat for the quarter, but not before a roughly 10% decline from the 1st of January to mid-February on concerns about a recession. Now, that never materialized, but it gave everyone a scare. One factor driving the turnaround in stocks was a weaker dollar and large gains in oil, which boosted commodities across the board. Metals and mining stocks, for example, are up 39% this year, and gold's up 16%, its biggest quarterly gain in 30 years. But the news was not so rosy for the biotech sector. The NASDAQ Biotech ETF, a basket of biotech stocks, down 23% year to date. Many of the biggest names are seeing a slowdown in sales and earnings after years of torrid growth. So momentum investors have been getting out. Another problem for biotechs is the issue of drug pricing. High-priced drugs have drawn the ire of many groups, including Congress, and that's an issue highlighted by the whole Valiant fiasco. It's unlikely there will be wholesale government intervention in drug pricing, but with the election coming up and the possibility that drug companies could become punching bags for politicians, many investors are just sitting on the sidelines. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So while biotech stood out for all the wrong reasons, it was the opposite story for industrials, amazingly. That sector went from laggard to leader in the first quarter, with shares of big manufacturers outperforming the broader market, raising hopes that their profits will follow. But can this industrial comeback be believed? Mike Santoli takes a look.
The stock market is warming to the idea of an industrial revival. Shares of big American manufacturers have been on a roll. Industrial stocks as a group are up some 4% year to date compared to a flat S&P 500 index. And since industrial giant 3M reported upbeat results 2 months ago, the sector is up some 14%, more than twice the gain in the S&P 500 since then. Meantime, the largest U.S. industrial, GE, has climbed to an 8-year high. The question now, is this simply a fleeting rebound after a bruising 2015 for industrials, or is factory activity truly poised for an upswing? Economists are starting to see some fresh cause for optimism. A key gauge of manufacturing due on Friday is projected to show the first monthly expansion since last summer. Goldman Sachs economists this week suggested manufacturing is indeed turning a corner, pointing to higher freight volumes and firmer oil prices. The pullback in the U.S. dollar has also eased pressure on American producers that sell goods overseas. Of course, any manufacturing rebound would likely be fragile, given slowing auto sales and a possible rebound in the dollar. At least for now, though, investors are willing to bet that the worst is over for the industrial economy. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
In Washington, a meeting of the leaders from two of the world's largest economies, in fact, the two largest, President Obama and Chinese President Xi Jinping, pledged to cooperate on some major global issues, including the North Korean nuclear threat, human rights, and cybersecurity. John Harwood joins us now from Washington. John, welcome. Were the two leaders able to narrow their differences on cybersecurity, of course, a topic of supreme interest to businesses?
I don't know that there's any evidence they narrowed their differences. President Obama, going into the meeting, said they were going to have candid discussions on those issues, among others, that they disagree on. The main focus of trying to reach agreements today was on the nuclear issue. But as part of the regular dialogue, White House aides call it high-tempo engagement with the Chinese. Those subjects come up on a regular basis.
Any breakthroughs on other issues? Sounds like there weren't, but the nuclear one is obviously very pressing, particularly in the Korean Peninsula.
The two sides did say that they were going to accelerate their work on climate change. This is something that they cooperated on, leading to that Paris Agreement last year. They also said that on nuclear security that they were going to hold annual bilateral meetings. They held one in February to talk about this issue. They discussed it again today, and they're going to make that a regular thing. This is all part of the administration's attempt to pivot U.S. foreign policy to Asia, and nuclear security is a shared interest to both sides because of that volatile regime in North Korea.
Turning quickly to politics, John, Donald Trump met with GOP party leaders in Washington today. What did they discuss?
This was not a meeting set up, Tyler, about the Donald Trump's statement that he might not support the Republican nominee if it's not him. This was about the convention. We could be facing a brokered convention, fights over delegates. It's about how that would work. Also about general election coordination, because remember, Donald Trump still is the front runner in the race. He thinks he's going to be coordinating with the Republican National Committee this fall. We'll see if voters give him the chance to do that.
All right, John, thanks very much. John Harwood in Washington. Also in Washington was Canadian Prime Minister Justin Trudeau. In an interview, he was asked about his country's economy and being the U.S.'s largest trading partner, whether he would be open to renegotiating the North American Free Trade Agreement, which, of course, has been a contentious issue this election cycle.
I think we have to understand that trade is ultimately good, not just for our countries, but for our businesses and for our workers. We know that engaging with the world in a constructive, positive way leads to good jobs and good growth. I'm not worried that we're going to suddenly reopen NAFTA or other trade deals. The challenge is once you reopen it a little bit, they all tend to unravel, and it's too important for both of our economies to continue to have a strong trading relationship.
And a report today showed the Canadian economy grew by the most in 3 years in January, driven by a rebound in the manufacturing sector. Latest data being interpreted as a sign the economy may be emerging from the weight of the commodity rout. Well, Reagan National Airport in Washington, D.C. is one of the 10 airports across the country where service workers set up picket lines and walked off the job today. The protesters say they are being grossly undercompensated, and on the eve of the monthly jobs report tomorrow, they are demanding higher wages. Hampton Pearson has our story.
Stand up, fight back. The protesters are workers hired by private contractors to work as wheelchair attendants, baggage handlers, and skycaps for the airlines, many of whom earn less than $4 an hour plus tips. The 24-hour strike is the first time workers here at Reagan National have tried to make the traveling public aware of their desire for higher wages and better working conditions.
We get paid $2, and some people get paid $3 and $6.75, which is not fair to us. In this living cost, we cannot afford to be getting paid $2 or $3, so we want $15 today. We demand to get it.
Help is on the way. It's all part of a nationwide organizing campaign by the Service Employees Union.
The strike today is part of a national push by airport workers standing up with other underpaid workers in the Fight for 15. That's a movement, and to do whatever it takes to have a union, dignity, and respect on the job.
Minimum wage critics say the real goal is to boost union membership.
For years, the SEIU has realized that there are segments of some of these service industries that they think they have an inroad in, and so fast food was one of those. I think contracted airport workers are another.
For now, the major airlines are keeping their distance from the labor dispute, A statement from their trade association says, "We continue to believe that the appropriate way to address minimum wages is at the statewide or national level." The airline's also emphasizing contingency plans minimize the impact of today's walkout on the traveling public. For Nightly Business Report, I'm Hampton Pearson in Washington.
Jobless claims rose for the third straight week. The number of workers who applied for unemployment benefits, a proxy for layoffs across the economy, increased 11,000. That is the highest level since the end of January, but it is still consistent with a strengthening labor market. Well, the government's monthly employment report will be released tomorrow. Expectations are for a 213,000-person increase in non-farm payrolls. The unemployment rate forecasted to remain right where it's been at 4.9%. Economists on average expect a modest rise in average hourly earnings. Well, despite what the job data tell us tomorrow, new research out today says that temporary and contract workers were the drivers of job growth in the labor market over the past decade. According to a New York Times article, Americans using alternate work arrangements rose to 9.4 million from 2005 to 2015. Neil Irwin, senior economics correspondent and author of that article, joins us now. Neil, good to have you with us. This was a study that came from a couple of very prominent economists. Tell us what the numbers said.
Yeah, I mean, the key idea is that 10 years ago, back in 2005, only about 10% of American workers had these different independent contractor, freelance, on-call, different types of arrangements that aren't a traditional job. That had risen to almost 16% by 2015, so last year. So that's a really remarkable increase in just a short time. And so that's a sign that the very definition of what is a job seems to be shifting beneath our feet.
So of all the job growth that has taken place since the end of the recession, is most of it from people who have contracting or temporary gigs or not?
Yeah, more than that, more than 100% actually. 9.4 million is the gain in these types of alternate, non-traditional jobs, independent contracting and so forth. Total job growth or total growth in employment in that same span, 9.1 million. That means that essentially more than 100% of the jobs gained over the 2005 to 2015 period were in these unconventional kinds of arrangements.
So I guess employers like this because it keeps people off the permanent payroll, but there are strong implications here, aren't there, for benefits and all of the things that typically come with a full-time on-payroll job, whether it's a pension, rare, or workers' comp, or lots of other things.
Yeah, I think what we sometimes forget, a job in the traditional sense, it's not just about the paycheck. Part of what you're getting with the job is a kind of understanding that your employer will take care of you in some certain ways, whether it's sick leave if you get sick, health insurance, of course, retirement funds, workers' comp, jobless benefits. So those are things that kind of protect you. It's a form of social insurance that employers provide in the modern economy. And these less conventional, these independent contractor types of arrangements are often missing those layers of protection if you're an employee.
Now, if you work for a temporary services firm, however, sometimes you can get some of those benefits from that firm, correct?
That's right. And also, the Affordable Care Act, Obamacare, has changed the equation a little bit. It's made it easier if you're one of these independent contractors living from gig to gig as a freelancer, whatever it may be. You do have a pathway to get health insurance that's more clearer than it was a few years ago. That said, there's a lot of stuff that employers, traditional employers do that you're still not getting if you're kind of running around as a freelancer.
How many of these contract workers are Uber drivers, Neil?
Not as many as people think. There's all this buzz around the gig economy and apps, whether it's TaskRabbit, Uber's the big one. This research from Alan Kruger and Larry Katz at Harvard, it's actually suggests that it's only 0.5% of the workforce are in these gig-related app-driven jobs. That's compared to, again, to 16% or in some kind of independent contractor arrangement.
Interesting. Neil, thank you very much. Fascinating story about the changing workplace. Neil Irwin with the New York Times. Well, 5 top female members of the U.S. women's national soccer team have filed a federal complaint charging the U.S. Soccer Federation with wage discrimination. The filing alleges the women earn far less than their male counterparts on the men's national team, despite winning on the field and higher anticipated income. According to the complaint, female players earn sometimes as little as 38% of what the men earn on the national team. Still ahead, the challenges now facing an industry that is usually a strong performer even when others falter. The head of American International Group sees an opportunity to shed his company of the too big to fail designation. But following yesterday's court ruling that threw out MetLife's systemically important label, AIG's CEO says he would prefer to work with regulators rather than taking them to court.
I've been watching this case closely. It's obviously not over. It'll get appealed, and so we'll watch how it progresses in the higher courts. And much of the ruling is sealed, so we'll wait to see what emerges when that gets unsealed.
AIG, as you probably recall, took a $182 billion bailout from the government when it was near collapse in 2008. That was the driving force behind the systemically important designation. Meantime, GE Capital says the government should drop its too big to fail tag on it, since it has significantly reduced its size. The unit filed a formal request with the Financial Stability Oversight Council to have the label removed. GE Capital is exiting consumer and leveraged lending and has reduced its real estate, debt, and equity holdings. Hindsight, as they say, is 20/20, and today we learned that 20 years ago, General Electric was presented with the opportunity to buy Apple for just $2 billion. Today, it is worth $600 billion. In an interview, former NBC Universal chief Bob Wright described what happened during a meeting with then Apple CEO Michael Spindler.
He came and gave a pitch in 1996, and he kind of broke down during the presentation. He was telling us that the stock is killing him, the investors are on his back, and he can't get this thing rolling. The consensus in the room was, we can't do anything with this. This is way outside of our game. We were not a Silicon Valley company or an orientation at that point, and there was no supporters at all.
And that meeting occurred the year before Steve Jobs returned to Apple and, of course, transformed the company. Well, Anbang is walking away from Starwood Hotels, and that is where we begin tonight's market focus. The Chinese insurance company pulled its $14 billion bid for the hotel chain, citing, quote, various market conditions. Marriott and Anbang, meanwhile, have been vying to take over the hotel and resort company. Marriott's more than $13 billion takeover offer still stands. Shares of Starwood fell sharply in after-hours trading on the news, as you see on that graphic, finishing the regular session down a tick at 83.43. Meanwhile, Marriott also down following the news after closing off slightly at 71.18. McDonald's wants to expand its presence over in Asia. Within 5 years, the fast food chain plans on adding more than 1,000 franchise-owned restaurants in its mainland China market and additional locations in Hong Kong and South Korea. McDonald's currently has more than 2,000 company-owned restaurants in Asia. Shares fell a fraction to 125.68. Chipotle apparently wants to get into the burger business. The fast food burrito chain said it has filed an application to trademark the name Better Burger. The company says the move into making burgers is a growth seed idea. Shares sprouted 1% to 470.97. The fitness tracking company Fitbit has shipped 2 million units of its latest devices, which were launched just this month. The figure surpassed the company's sales expectations, and that news sent shares higher. Fitbit spiking 13% to $15.15. The watchmaker Movado is raising its quarterly dividend by 18% to 13 cents a share, and it is also launching a $50 million share buyback program. However, shares of the company fell on weak earnings guidance for the year. Movado ticked 9% lower at 27.53. Well, consumer spending makes up 2/3 of economic activity in the United States, and despite questions about the lower-end consumer, the higher end has held up pretty well until now. Courtney Reagan at a conference in New York City tells us why some executives are growing concerned.
It's an exclusive group, typically operating in quiet secrecy. But today, luxury brand executives came together at the French-American Luxury Symposium in New York City to talk about the challenges facing the industry. Luxury is defined by a number of factors, including exclusivity, heritage, and of course, price. But today's consumer and current macroeconomic influences are challenging the industry.
Participants at today's conference, companies like Oscar de la Renta and Tiffany & Co. took a snap poll, and most expect to see their sales grow between 3% and 5% this year, even in the face of several factors that could derail growth.
Tourism is particularly challenged. I think that the price of a barrel of oil, currency fluctuations, and of course those two are related, but also uncertainty in the world, whether it's uncertainty about traveling due to fears of terrorism, uncertainty about a presidential election. Uncertainty is bad for our business.
Much like other consumer groups, the categories that wealthy consumers are spending on is shifting more towards experiences. According to consultancy firm Bain & Company, worldwide luxury sales in hospitality outpaced overall luxury sales growth last year, making it that much harder to convince even affluent consumers to spend money on material things, as some who know the industry well think the showcasing of luxury goods lacks excitement.
I think what retailers have to do is make their stores more interesting and more have a little more of a vision. The brands need to be a little bolder in their conversations with the department stores about how consumers are shopping.
And while high prices for true luxury items like Hermes and Chanel are accepted among the affluent, Fresh does think it takes decades of history to earn that privilege, meaning some brands' prices are just too high. For Nightly Business Report, I'm Courtney Reagan in New York City.
And coming up, you won't believe what may be coming soon to a theater near you. Here, folks, is what to watch tomorrow. As we reported, the employment report for March is due out before the opening bell. Everybody watches that one. Auto sales for March also be released, and we will hear from the president of the Cleveland Fed, Loretta Mester, who is known to lean in favor of rate hikes, but only on April Fool's Day. That's what to watch tomorrow. Just kidding. April Fool's Day. Daily fantasy sports operators DraftKings and FanDuel are suspending contests on college sports indefinitely. In all states, all contests will end after this weekend's college basketball games. This voluntary decision is part of an agreement with the NCAA. Both of those companies, meantime, fighting numerous legal battles in other states that argue the contests are games of chance and not of skill. Well, regulators are looking at the fast-growing financial tech sector, which is disrupting the traditional financial services industry. In a speech today, the comptroller of the currency said his department is considering new rules that would encourage innovation, but at the same time prevent undue risk to the financial system. The companies that have been creating more efficient payment systems and lending platforms include SoFi, OnDeck, Apple, and Google. Well, a separate report from Citigroup says the rise of technology in the financial services sector could result in a 30% decline in banking jobs across the U.S. and Europe. That's about 2 million employees who could potentially lose their jobs to startups. The report describes the industry as being at a tipping point, and it is in the early innings of a transition. Well, the future of movie theaters has also been called into question. While total box office figures have been increased in recent years thanks to higher ticket prices, the number of tickets sold in the U.S. has been on the decline. That's because people have more options than ever when it comes to in-home entertainment. But as Julia Borston reports, one theater is going to great lengths to reverse that trend.
This is the cutting edge of movie theaters. This 3-screen panoramic theater with surround sound called the Barco Escape is launching tomorrow at this Regal theater owned by AEG in downtown Los Angeles. There are new laser projectors, immersive surround sound speakers, and the lobby is outfitted with fast-changing high-def displays.
We need to raise the bar. We need to do something that is so compelling that people put down the iPad, leave the couch, and actually go to the cinema. This is why we created Barco Escape.
There's been an explosion of alternatives to movies, including more premium content available at home from Netflix, Amazon Prime, HBO, and others. So theaters are grappling with the fact that the number of movie tickets sold in the United States has declined 7% since 2009, and the threat posed by home entertainment will only continue to grow. Sean Parker's working on a new company called Screening Room to allow people to watch movies at home the very day they debut in theaters. Plus, nearly half of all U.S. homes are projected to own a 4K TV by the year 2020. That's why AEG, which owns and operates sports and entertainment venues all around the world, is investing in the most high-tech experiences. This new Barco Escape technology joining the 4DX theater already here with seats that move, wind and smells piped in, which AEG says has been a huge success.
If we can provide an immersive experience, that there's a demand for it. People want that. And there's a young generation of moviegoers that want to be brought into the movie more.
And this triple screen behind me is accessible enough that moviegoers all across the country will soon be able to try it out. It costs theaters just about twice what it would cost to install a regular screen, and Barco's in talks with all the theater chains to roll it out to 1,000 locations in the next 3 to 5 years. So the more your living room feels like a theater, the more high-tech movie theaters will become. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And that is Nightly Business Report for tonight. For Sue Herrera and all of us here at NBR, thanks for watching. Have a great evening, everybody. We'll see you tomorrow.